Well, we're also tracking mortgage rates here on the day. Mortgage rates ticked higher for the fifth week in a row, now at 7.22% for a 30-year fixed rate mortgage, according to Freddie Mac. No sign of relief in sight for home buyers just yet. For more on the outlook for the housing market in this rising rate environment, we've got Larry Connor, who is the founder and managing partner of the Connor Group. Larry, thanks so much for joining us here. I mean, as we think about the mortgage rates, and we were just showing on the screen some of the figures that are really jaw-dropping for many who are trying to enter into the home buying market, how is this going to have an impact on the spring home buying season, even from your perspective?
Yeah, Brad, thanks for having me. So, interesting question. So typically in rising mortgage rates, as you might suspect, it closes out people from buying homes, and the net beneficiary is the apartment industry. An interesting side thought to that is that because there's more demand, actually higher interest rates can cause higher rental rates. Why? Kind of supply and demand. So when the Fed talks about, that inflation is stubborn, and specifically in the shelter area, and specifically there in apartments, that's part of the reason for it. Here's the unique phenomenon going on today. Right now, in a number of our markets, we are seeing more concessions, 2 weeks to 3 months, than we've seen any other time in the last 5 years. So that's very atypical for what normally would be happening in rising mortgage rates.
Yeah, that's really interesting, and it speaks to some of where there's still kind of a push and pull, especially as the people who are trying to or want to be in the market to purchase a home are still being forced to rent, and that demand for the rental properties as well, which, I mean, you are a very successful investor in the multifamily real estate side. What advice do you give hopeful buyers out there as well?
Be patient. I think mortgage rates, maybe not over the next 6 months to the next few years, we believe will moderate. And think about this: apartment communities versus homes. Apartment communities, if you're going to build one, it takes 3 to 4 years from the time you start planning to you're completed. That's why the supply is delayed, and that's why in a number of markets like Austin, they're doing concessions because there's way too much supply of huge building between 2020 and 2023. The single-family home market is actually far more nimble, so they can scale up and scale down. So if there's a shortage, you can go find a lot and build a house in 12 months in most cases. Or if there's too much supply, you can cut it back. So our guess would be that come next year, home prices, which are up, I think I just saw something on Case-Shiller, they're up like 7.3% across 20 different surveyed markets. We think those will probably moderate, as well as interest rates.